Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. Here's the Treasury bond, folks, we had yesterday. We completed the ABCD, Gartley, at the 786 exactly. You can see we're down quite a bit, 1.5 right now. As we look at this on a shorter term basis today, you can see here there was a move. We had a little bit of a 382 yesterday, and now you can see we're just heading down and down and down. I don't know what the Fed's going to do, but I can't believe that the President of the United States called the Secretary, the Chairman of the Federal Reserve, a moron. I don't care what your politics is. That's not good stuff. Anyway, in fact, I wish Tom O'Brien Sr. was with us, because I would offer him an apology, because I argued with him 12 years ago about something, and he ends up being right. Okay, let's get this out of the way here. And nothing to do with politics, by the way. Okay, get this out of the way here. Also, we had another one that we've been very comfortable with. We've talked about this U.S. dollar and what's been going on. This is the British pound. You can see how much it's broken from the high that we had right back here just 2 days ago. Okay, actually 1 day ago. No, it's 2 days ago, because we made the high right back in here. So that was yesterday. My gosh, look how much it's come down. Remember, this was what we were watching on that, was this long-term weekly. We were banging up against that. We did it again. It's now come down again, broken very hard. As you can see, earlier this morning, we were down even a lot more, and now it's bouncing back right now. We're probably right at a 382 right now. Let's just double check to see if we can bring something home for the kids today. There's the high, there's your low. Uh-oh, look at this, boys and girls. There's your chance right here. We're almost there right now. So if you like 382, and I do, you got to sell it right there at 134648. It's up just a few pips. Put that in there so we can see when we get filled, and then we're going to see what happens. And just, whoa, hold on just a minute, cowboy. No, right here would be a number, and then the stop would be right up there. Anyway, that's what I would be watching here today. Folks, the volatility that you're seeing today, I just want to bring something to your attention to. I always talk to you about the numbers on Wall Street, okay? So just humor me for just a second. Okay, let's start off with the NASDAQ today, because it's been all over the map, okay? Look at the NASDAQ. It takes out the previous day's low. Look at that. From the 20, it takes it out by one tick, and look what happens. It just explodes to the upside. That's because those dudes know that number. When they see that and it doesn't go down, there come the buy orders, and that's exactly what happened. Well, that's just a little what we call a coincidence, Larry. Well, let's look at another coincidence. Look at the Dow Jones, which is, the laggard today. It's still, down on the day, but look at it today, folks. There was a 382 from the previous day's low. There's the low from Monday. There's the exact 382 of the low right here. Now you can see it's backed off a little bit, but that's neither here nor there. So, but that in fact, the fact that is going lower, because, well, I don't know if it's going lower, but you can see here that is a 135 pattern that we have going on right now. But look how it hit that. Okay, well, you just got lucky in that one. Let's try one more just to be lucky with it. Okay, here's stop and P. Okay, here's the S&P. Where did it stop? Exactly at the 78% level of the previous day's low back on January 1st. Doesn't make any difference which one of these lows you pick. It still comes in right here. We went right back up to the high. So, and believe me, folks, this volatility where you see down and up and down and up, that is not how bull markets work, folks. Bull markets, people like to see them go up and slowly and back and forth and back and forth. And when you see stuff like that, this is what's scary. This is a bull market. Remember that We had here yesterday. This is a long time ago in the gold. Well, 2 days ago. Look at that. There was your 382s all the way up. We're not seeing that. We're seeing these big gyrations. And gyrations means there's buyers and sellers on both sides of the hall. And that's why you get these big moves happening in some of these things here this morning that we're looking at. I have to bring a couple of things to your attention, too. We've covered those three, NASDAQ, Russell. Oh, the Russell. Should talk to you about the Russell, because what did it do? There was yesterday's low, stopped exactly at the 50% level, and now you can see it looks like we're getting ready to try to break out to the upside, which we certainly could. Now, tomorrow's action, folks, they're going to be open a half a day tomorrow, and believe me, it is going to be SLOW. That doesn't mean there's going to be not volatility, because if there's nobody in there trading on either side of it, it can get very volatile. And we're all closed on Friday. Globex comes back on Sunday night, and so we'll start to see some things moving around there also. But we have probably the most positions I've had on in a very long time when you stop at the grains and the British pound, and we don't have this one. We got knocked out of this right here, and we haven't done anything in that. There's nothing else we could do. We got stopped out of that one. But the gold has been treating us really nicely, and the pound has been good. Now the grains are starting to help us out too. So that's a couple things that we're paying attention to. Let me connect these so I don't forget what I want to be talking about. The other thing, if you remember that trade we had on for the dude from Greece. Didn't mean to say that, which was Avco. Let's get it up here. And you'll see here this morning is we were up 17 points on this, folks, from this point right here early this morning, made a new low here today. And, that's what I did was I told the guy, well, I didn't tell him what I would have told him. I says, you put your buy stop right there. You lock in 10 points. But look how you make a slightly lower low than yesterday. That's not a bearish sign. Now you can see we're having a pretty good move here. The other one that we did was Softy, and that Softy doesn't look very good, folks, and it's been the leader of the pack for quite a while. And let's see how it's going, because last time I saw it, it was still underwater quite a bit. And see where we are here right now. It still is. Look, you see it opened lower, rallied up, tried to make a 382, missed it by a heartbeat, and it's still down. We sold it at 96.70, so that's got 5 points. So between the two, it was a 17-point win. But we also had corn in that group, and corn is actually doing quite nicely for him if he would have done it. But he isn't. I'm not going to be working with him. Let's put it that way. Okay, a couple other things. I've got a list here of things that I want to talk about. We went through the things with the U.S. dollar several times yesterday, folks. People kept telling on today on the Bloomberg, when I started looking this morning, all they talked about is how bad the U.S. dollar was. And I said, what charts are they looking at? Well, they were looking at all the charts other than the euro and the pound, because the euro and pound have been coming down rapidly. Okay, well, this one's not so rapidly. You can see we had a little ABCD here and a rally back. I can see where they might be seeing that. But if you looked at the pound, and if you looked at that all-time favorite, one of the ones that we liked, which was that Japanese yen, had some really crazy action here. Let's take a little break. The Wolf Trader, Shan Smolian, will be our guest at the break, so hang in there.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Okay, folks, this is the one I missed this week, yesterday. This is a perfect example of the Hearst stuff, cycle. There's high translation, you see right in the middle. High translation on the right, that's very bullish. You can see 25-day cycle, stopping exactly at the 61% retracement of the low right here. That's Mother, God, and Country. What I missed was when you looked at this hourly chart, you had all of these beautiful ABCD patterns coming in here. Look at them. They come right there at the bottom. Now, of course, it's backed off a little bit from that level, but look at that. That's a two-handle move, folks. $2,000. Now it's backing off. So what you want to be watching here is to watch this pullback, because we've got the next day or so. If it can hold up in this area, one thing I do know is if we go below here, this is really bad. See, all we've done so far is we pulled down to a 50% retracement, then went back up, and we're there again. So there's not really much showing right here. Okay, but that's what I did miss. Okay, now I wanted to make sure I covered that. All right, let's get this out of the way here. Hold on a second, folks. I'm trying to do too much. You'll notice here, just to see where the market is right now. Get this here. As you can see here, this is the Dow Jones. You see it has these lower tops in here, whereas we've gone higher in the Russell and the S&P and stuff like that, but and the NASDAQ, but this hasn't. Now, Mr. Tucker just asked me to take a look at the NASDAQ for him, so just give me a second. I got to do it the other way. And vertical, I hope it's still in here somewhere. There it is. No, that's natural gas. There it is. Here it is right now. Yeah, he asked, am I selling it in here? Well, where I'd sell it is right there at that 786 right here. Now, you can see here, when we took this out, this was just straight up. In fact, one of the things that I was going to bring to your attention is if you went down to a really small time frame after that market exploded to the upside. You see that big explosion right here? Look at that. There's your sign right there. This only takes, let's see, 10, 15. It's 15. That takes 15 minutes for that to back off, okay? But the back off is exactly 382, and that's telling you that, by golly, this thing's getting ready to rip. In fact, it misses it by 1 point. And then you can see away we go, and you have maybe another one right here and then another one right there. But now we've rolled over again, and I'll just see that we didn't get to that 786 level. Let's just draw that back in to see it, because that would be at 2860. I personally, this number right here, folks, is the number where I think the top was made here on the 30th. Okay, that was Monday. I think that top was made. All we're doing now is just backing and filling and moving games back and forth, stuff like that. But again, that's my opinion, and that's it. Just like my opinion in the grains, I think that you want to be long this stuff during the growing season. The growing season is now. I mean, we're in the monsoon season, folks, as of Monday or Tuesday, and we had a rain yesterday. That's the first day we've had rain on the exact day. Now it'll rain during July and August and September. Rains a little bit every day, but it gets our temperature down. We won't see 112, 111 and stuff like that. We might see 105, but 105 for us is like 95, for anybody else. So anyway, that's it. Okay, now the hogs are continuing to go lower. They're having a little bit of a rally today. Actually not very much. So they're not the important ones. The important one is, folks, the fact that corn market turned, because that market had been beaten up really badly, just like the meal market. But they were in that buy zone, and that's why got stopped out. Well, we had to try it again. And with the corn, I mentioned before, we had a stop at 19, and I said it's too close. You got to move your stop down a little bit to give it a little bit of room, because you're only talking about another $150. So we raised the stop to 11, okay, and now it's trading at 28. So you're in the money now. So that's why it's all about how much money you make. It's about how much money you don't lose. And you want to control, what your losses are, and then you're going to be okay. So one thing I try to do, we're almost there in that British pound, folks. Well, not quite yet. We're getting very close. I like that trade right here, by the way, because that is definitely a bear pattern. You can see that there's a bull market here. If you'd have done the 382 on this one right here, that I got you short right about there. It went a little above the 50%. But then look what happened. Boom. Let's see if this one right here was a 382 this morning, from that high down to that low. There it is right there. Strong trending markets, folks. You don't want to fade those. Watch that 382. Nothing is more apparent than you can see what's happening in the gold market, in the bond market, and that's what we're watching. So, okay, now let's move on to the next one here that I have to talk about. I got it written down here. Hopefully I won't forget here. The dollar index. This is what they're saying in the news about the dollar index. Now, I disagreed with them on this for a couple different reasons, because hold on here, DX, we're A, B, C, D, E, F, G. There it is right here. Okay, there's the dollar index. Now you can see here we had a pretty good rally. Let's get the hourly up, because that's what we were watching yesterday. We went down below that level at 96, and all we've done so far, look, that's all we did was make an ABCD pattern right there in the dollar index. Now, if you're trading the euro, that's what we were looking at on the opposite side of the euro, and also the Japanese yen. The pound, not so much, because the pound is weaker. And you always want to sell the weaker and buy the strongest. At least that's what the rule book says. Sometimes the rule book's wrong, but that's what we're paying attention to here right now. Okay, we had a question about a couple of stocks here. Get those up here. There's the normal ones. We'll look at Tesla. It's very strong today. Evidently, the two guys have made up. I don't know what they're doing there, but that's I don't know how well people in foreign countries don't watch our news, so that's a blessing for us. Okay, here's Tesla. It's been really strong today. There it is right now. There it's the gap up. You can see we had a gap up this morning. Let's just see what we got here. Okay, we had a gap up this morning. That looks pretty strong. All right, let's use our old 382 rule. And look where it is right there. Right after the opening, pulls down to the 382. Gives you a really good chance. That's a strong trend. pulling back to the 382, looking pretty good, Billy Ray. So that's pretty much what we're watching now. Let's take a look at Apple, and that's also been very strong. I see it was upgraded by somebody. I heard that early this morning when I was listening to the other things on Apple. Nope, it gapped up too. It's gapped up again. There it is, right? Let's see if this last one was a 382 here. Let's see. We didn't look at this yesterday. So let's just see if that was a 382. Boy, it's going to be close. No, it misses it by, oh my goodness, only misses it by $1. Well, that's a lot in a $200 stock. And then you can see we went up and we hit this number here. It's backed off actually a little bit, so it's acting a little weaker than it was from the very beginning. And someone also asked about NVIDIA. Shane Smolian is going to be our guest here at the break, folks. And we're going to be looking at this here. Pretty good. Now, I'm very bearish stocks, but I don't have a position, so that's probably good over the holidays. There's NVIDIA. We had the pullback. All right, there's a pullback here from the 23rd. Let's see if that was a 382 here yesterday. There's your low right here. There's your 382, came in right there, and here it is up. So, hey, we're going to be right with the Shane Man, folks, so stay with us. 877-927-6648.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, we're back, folks, and we have the Wolf Trader in the house finally. How are you, Shane?
Larry, can you hear me?
Living the dream, baby. You're sounding good.
Right.
You're sounding good. Much better than me, by the way.
Yeah, my voice is a little bit hoarse, so I'll try to get through this, but I'll just talk slow today.
I'm pulling the stagecoach because mine is hoarse too, so please continue.
No, you got it. All right, so I have a presentation here. I'm going to go through the S&P first. I'm going to kind of give some background information in terms of what we're seeing. There is obviously a lot going on right now with the tariffs, with the bill being negotiated, and then the inflation stuff, which we'll get into in a little bit. But let's just get started here. Fear and greed index is just an overall sentiment indicator. It's sitting pretty high right now. It's at greed. I would say, obviously you'd want it for a high, you'd want to see it a little bit higher, but it is sitting at a greed level, which is a condition for reversal. Volatility is still sinking right now. So that's one indicator that we look at also for markets. We want to make sure that when the market turns down, the volatility should start to rise. So it's still falling right now. So we still haven't got any indications yet from the volatility. Intraday right now, the S&P is kind of crawling up this Fibonacci speed line of this 38.2%. That can be a source of resistance, but it's still just kind of crawling up it. So it really hasn't made a decision either way, one way or another. Now, one of the things that I talk about is the fact that we do have a lot of gaps. This has been a very sloppy rally, which is one of the reasons. This is one of the reasons why I think we are going to come back and retrace this. But this whole time, because we've had all these headlines and U-turns and tariffs and cancellations and bombings in Iran and this and that, that's caused this market to have a series of gaps. I do think these gaps are going to have to come back and resolve themselves. So I'm moderately bearish right now on the market. I don't feel like we're going to have a major crash or anything, but I do think that this market probably does have to come back down and fill all these gaps at some point. The only problem with that is that gaps can go on for a long time before they're filled. But I just wanted to kind of point that out, that this has not been an orderly rally at all. So that's something that I look at, and I think that, generally those tend to fill. So I have a little calendar here. And so this month, we're going to have this non-farms payroll tomorrow, which is a little bit early. And of course, they're talking about this bill right now in Congress. They're trying to get this thing through. So it's kind of bouncing around between the chambers right now. But that could be very interesting tomorrow, because one of the things about the tariffs, there's this big battle going on where Trump wants the Fed to cut, and the Fed's like, I don't want to cut because of the tariffs. The problem with the tariffs is that we know what happens with tariffs. Like, we have a lot of data to see. And at some point, these numbers will make it into the inflation numbers. Now, the question is, how high will they get in? We're just now getting to this point where in the last GDP report, we had a negative print, but there were some strange things going on. A lot of companies were trying to stock up on inventories from before the tariffs. So they had this buffer in there. They had a lot of inventory. They had a buffer, and that causes, this caused a pause in the inflation. So we really haven't seen the inflation yet come in. And so it's going to be this big battle between unemployment and GDP versus inflation. The problem with tariffs is nobody really wins tariffs unless they're targeted. And ultimately what happens is, you're going to see a rise in prices. The only thing that we can hope for is that tariffs cause economic slowdown too. So you really need to hope that your competitors will slow down more than you to kind of win the tariff, quote unquote, win the tariff war. But in the meantime, before these manufacturers can reroute all of these facilities where they're building things and just kind of rebuild everything, which takes some time, there will be a rise in inflation. It will happen at some point. The only reason that it won't happen is simply if we're contracting, basically, if the economy is contracting so fast that you just don't see that inflation. But either way, that's going to come. So this is, I tell people, like, tariffs are not voodoo economics. quantitative easing is kind of like voodoo economics. The Fed just kind of prints this money and it just kind of shows up in the system. But we really do know that these prices will show up at some point in the tariffs. So what's going to be interesting is that I think we're going to see this slowing economy, slowing jobs numbers. But at the same time, I think we're going to start to see this once the inflation numbers get in. Remember, a lot of these are going to start now in July, too. Like we have numbers coming in, but in July, the buffer is going to end, the inventories are going to end, and you're going to see this rise in inflation. The question is just how much. So I think that might keep the Fed on pause for a while, and I think that would give a good reason for this market to kind of come back and digest all of this information that's kind of been thrown at us. The GDP doesn't happen until the end of July, so we have a ways to go on that. But we do have some inflation numbers coming in on the 15th. The PPI comes in on the 16th. So it will be very interesting. The Fed meeting is going to be on the 30th, and then the core PCE is the day after that. But they're going to have that information probably before. So, there's a good chance that they're still going to try to hold off on these interest rate cuts because, like I said, tariffs are not a mystery. It's not voodoo. We know what's going to happen. These prices have to go up at some point, even if it's temporary until we can reroute things. That's going to show up at some point. And I think that could keep the Fed on pause for a while. I really do. Okay, so can you still hear me?
Coming in great. Yeah, you're doing a great job.
So, long story short, the tariffs, Trump keeps pointing to the tariff data saying, look, it's not going up. Well, okay, but it hasn't really got into the system yet. Once we get through those inventories, now we get into July, more tariffs are coming. We will see it. So again, that's gonna come into the picture at some point. Now, I do want to talk about these forecasting models. I've been working on two big things. One of them is coming up with better forecasting models into the future, and we have our systems, the Fed use and all this stuff, and we're tracking the Fed use now. We have data on this we can show people, but I want some forecasting models too. And this is one of the ones that we look at, which is the super biorhythm. And this blue line here shows that the S&P is at some type of a high here in 630. And there's a series of rolling highs coming in. It's not just this one. There's like 4 or 5 of them coming in right now. So it's very logical that we would be at a turning point right now in the market. Again, I'm not super bearish, but I do think that if you can see this black line here, this black line is making a low. When you have a conflict of cycles, what tends to happen is you get a choppy market. So I think this is really painting a picture here of a market that could just kind of be digesting information over the next few months and coming back to fill some of those gaps. These super biorhythms are very, very good. You can see when they work together here. I have some other charts here. When you get cycles to work together, you get very, very nice pronounced moves in the market. And you can see here that the market is following this blue one very, very nicely. So I really like this as a preferred forecasting model. And this is looking out a little bit into the future. Like I would say we were looking out of 3 or 4 months, but I favor us now having to digest this. And it's going to come. The inflation is going to come at some point. Again, this is not voodoo QE. We're not pressing a button on a keyboard and printing billions of dollars. We know what's going to happen with the tariffs until they can rebuild the infrastructures and move things around and change the supply chains. There's going to be a temporary spike. I think that's going to coincide also with a US dollar.
We got to pay a few bills here, my friends. So we'll be right back with Shane Smoley and wolftrader.com, folks. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, we're back with the Wolf Trader himself.
I'm here. We ready to go?
Yes, sir. Fire away.
Okay. Also, just want to point out that these forecasting models, they are back tested, so we do have a very good back testing history on this. So I feel confident in them. I think they're good at least for a few months. I mean, getting out beyond a few months, it's pretty difficult, but I think for a few months they're pretty good. Now, I also want to show you here the U.S. dollar. The U.S. dollar is coming into a double low here. So it's a long-term low coming in, and then another medium-term low at 7.2. Actually, it's today. So I think the dollar, what's likely to happen is I think the inflation is likely to start to tick up, and the dollar is going to start to rise here in the next few months. At least there's the potential here to go all the way into January on this. And again, you know, the whole tariff thing is inflation is going to show up. We have to either reroute the supply lines, people have to change their habits or substitute, or we just get an economic slowdown and then the prices don't go up that way. But one of those things are going to happen. I do think we're going to get a modest increase of prices. I don't think it's going to be hyperinflation or anything, but it's going to show up, and that's probably going to be reflected in a rising dollar. Now, S&P, I do want to show you the Planetary Speed Index here. It is coming into a low here on the 4th, and then it peaks on the 18th, and then there's a fall here at the end of the month. And what's happening is there's a bunch of planets slowing down. So you have Saturn and Neptune. Also, you have Mercury's going to be retrograding here. And so when that happens, the planets slow down. And you start to see, markets generally don't like that. So I do think there's a case here that that July could be a time where we start to see these markets start to come back. There are some other markers of highs too. So I look at the New York Stock Exchange. I like to look at the new highs, the new 1 month highs or new 1 month lows. They tend to correspond pretty well with turning points. We did get a spike here back in May. We did get another spike just yesterday. So again, this is also pointing to another sign that we could be putting in a top here, at least a medium-term top. Again, I'm not ultra bearish, but I do think there is a lot of unfinished business into here that we're probably going to have to come back and just deal with. Once we fill those gaps, I'll feel better, and then we'll see what happens. Maybe the inflation starts to tick down again at some point, but I do think that's coming. If we take a look at the Fed internals here, the Fed has been generally pretty neutral here. We had this big decline. The big decline that we saw in January to February to March coincided with this big fall in the market. Fed's been generally stable here. We had a dip here in the last few days, but they kind of pushed back up. But this is still making a negative divergence here with the market. So when that happens, the market does tend to come back a little bit there. Taking a look here at the daily chart, you can see here we still have the planetary speed index in the sell. Quad lunar just goes into the sell yesterday, and then the Fed use is still in the sell. So to me, this is still looking like a topping pattern. The Fed use velocity is also at previous reversal zones. The Fed use is also making a divergence going back to May. So there's all types of warning signs here for sure about this market. These little blue arrows you see on the chart here, I've been doing a series of webinars talking about the different systems. And so these are the different systems. This is since the election. Going back to when Trump was elected, we just started tracking because the market's really changed since November. But these are all the systems. They're all kind of chugging along here. But the quad lunar cycle really does well, especially even without stops or targets. It does very well. And so that's the signal that just went into the sell yesterday. So I feel pretty confident here that we're probably making some type of a rounding top. Now on top of that, I thought I had more cycle biorhythms here. Oh, I didn't put them in. But we also have a series of other rolling tops coming in on the market. I guess I'll get to crypto here. I have three other cycles that are hitting highs right now too. So like I said, we're hitting a bunch of highs. Another thing I want to talk about is crypto. I believe crypto is making a high right now. We've been talking about this low too, this rally that was happening. I think crypto's coming into a high. There's another peak here on the right side. This black line is the long-term crypto peak, and the blue line is the medium term. And when they line up, you can tend to get stronger moves. I think crypto's in a topping phase right now. And the reason that's important for S&P is because they generally tend to follow each other. Even if you go back and you look at Fed phases, when the Fed does QE, it's always if you go back to COVID, it's always Bitcoin and S&P running together. And when the Fed gets strong, gold can get weak too. But I think this is kind of a warning sign, because if you look at the crypto, I have a chart here showing it's Bitcoin versus the rest of them. And Bitcoin is holding up pretty well because of the institutional hand in this now. But if you look at the rest of them, they kind of look, they don't look so hot. I mean, Cardano's really having a hard time down into here. Litecoin's falling off. Ethereum had a pop up, but they're all kind of looking very weak here. Bitcoin being the strongest hand. But I do think that this also lends to the case of the S&P coming in and making some type of a high here. We have a solar cycle here on Bitcoin. The Fed use has been excellent on Bitcoin. I just tracked that data too since the election, but this is in a sell still. And this cycle goes all the way down into the next couple of months. Bitcoin has generally a downward trajectory. So I had talked before about interest rate cycles, and this is kind of interesting now because we're having this. I had tracked this. It did an analysis of all the 10-year rate. What this says essentially is it says that we're in a slight up phase here. It's possible the Fed could try to hold on this. I mean, if this cycle kind of makes sense. If we get this inflation data coming in the next year or year and a half from the tariffs, it could take a while before the Fed finally starts to cut into here. I know the Fed's term, I think it ends in May next year, but this suggests that interest rates will be either rising or on hold. And so I think that would be a pretty big shock to the markets if that happened. And so it shows these interest rates, kind of sideways to up until early 2026. And to me, it seems like that makes a lot of sense with if you listen to Powell when he talks and he shows the projections, once that tariff stuff gets in there, it's gonna show up, like I said, and that's just enough to keep them on pause. The only thing that could really get them is if we get the very, very strong contraction in GDP or the jobs really, really fall off. But to me, this kind of makes sense. And then this shows interest rates falling into 2028. So that would also probably coincide with another housing boom or like housing's kind of sliding right now, kind of going sideways. But we know that the Fed has such a powerful hand in that between QE and the mortgage-backed securities. This is probably why the real estate really hasn't crashed yet, because they know the Fed can come back in and do this. So that would put us slightly higher interest rates this year or sideways, and then falling into 2028. And again, I would not be surprised if we saw some type of a shock on inflation. Like, I just think that's just be ready for that. I mean, there's a strong possibility that can happen. Do we have time to talk about gold here?
We always have time. Let's check what the clock on the wall says. We got 52 seconds now, plus another 3 minutes. So speak slowly. You have as much time as you need. Go ahead, please.
All right, so I'm going crazy with the biorhythms here. I know there's a lot of cycles here, but the main idea here is on gold is that I have these. The black line is the longer term super biorhythm. I have combinations down here on the bottom where I'm showing where they're working together as cycles.
But now we got to pay some bills, so stay with us.
Sure.
Hold that thought.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, we're back, folks, with Shane Smolian, wrapping it up the next 3 minutes, my friend. Please continue.
Sure. Let's finish up with gold because that's everybody's favorite topic. So I have here this long-term super biorhythm. It is coming into a high. This is coming into a high around July the 15th, somewhere around there. And then if you look down here, I've taken when these biorhythms are working together, and it shows another peak here into the very, very end of July. So it could be that we see another run up here in gold until probably the 15th to the 30th of July. But then it shows a big pullback going into October or November. I do want to dovetail this real quick with what we talked about with the U.S. dollar. And I have the U.S. dollar also at a major low here. So that makes a lot of sense. If the dollar's making the low, if the tariffs start to show up, that's when the dollar should get strong. And then that's when gold should start to kind of back off a little bit. I don't see gold in some kind of a major bearish pullback, but I do think there's a good chance it will consolidate and kind of come back here in the next few months. Now, Trump could bomb Iran again tomorrow or something crazy could happen. But I'm just saying, based upon what I'm seeing with these cycles and the super biorhythms, that's what we're looking at here. So that's my presentation, hoarse voice and all. So.
Okay, we have two questions for you. One is a political question. Is the stars aligned really strongly with Trump on his astro chart? Why everything's going in his favor?
Yeah,
that's a question from Missouri.
So Uranus is going to move into Gemini, and Trump he's Gemini, and he's also Uranus. He has Uranus on his sun, so I think that's got to be really strong for him, just the Uranus moving into Gemini in general. And so he just came out of a Jupiter phase in Gemini when he got elected, but now the Uranus energy, I think that's extra strong for him. And also Pluto is in Aquarius. So these are strong positions for Trump for sure.
Okay, one other question is, do you look at the day, this is from someone in Louisiana, and the question is, do you look at the aspectarian every day?
Do I look at the aspects every day?
Yeah.
I do. I talk about them to subscribers, but yeah, to some degree I do, yeah.
Hey, listen, thank you very much. Have a wonderful 4th of July, my friend, and may God bless.
Thank you, Larry. Take care as always.
You bet.
Always a pleasure.
See you Monday, folks.
Thanks
May God bless.
Steve Rhodes